Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Saturday, February 5th, 2022. We finally made it to the weekend. What a trading week we have, and we are going to be going over all of my trades that I took last week, when I bought them, why I bought them, how I'm going to manage them going forward. We are also going to talk a little bit about trader psychology and the importance of developing the skill of creating a plan and then following your plan. So we'll spend a few minutes on that. Then we are going to go down through my watch list. We're going to take a look at each stock in my watch list. We're going to look at the structure of the chart, and we're going to see if there are some potential upcoming trades for next week. But thank you for coming. I hope you had a good week last week in the market. We finally did seem to catch at least a temporary bottom, and we did have a bounce. A lot of deep dip buy signals went off, and that's why I have so many positions. You know, it's been an interesting year. At the beginning of the year, of course, we had the big move down, and was fortunate not to have a lot of signals and therefore not to have a lot of losses. But we did get signals here at the bottom, deep dip buy signals, and like I just mentioned a minute ago, we're going to go through all of my positions, both on the on the daily charts, on the weekly charts, on the monthly charts. But before we do that, I'm going to have to run the U.S. legal disclaimer. It takes about 40 seconds, so hang tight, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for holding on with me, and thanks so much for coming today. Really, I hope this new format is helpful for people to kind of give an idea of how I look at the markets, how I trade the markets, how I set up my trades, good risk to reward ratios, confluences of signals, trailing stop levels. So I'm hoping this new format is helpful. And if you have any suggestions of how I could make this podcast better, this new version of the podcast better, the weekend edition, I'd love to hear from you. So you can email me. Email is in the link of this YouTube video. All right, well, let's get started, and here we go. Microsoft is first on deck. I did enter Microsoft back on 126 right here when we had an under 30, over 30 signal. That's a deep dip buy signal. There were buyers that came in at the 30. The price did not want to go down anymore, and so this was a confluence. Actually, it was a under 30, over 30, and a close under and a close over the 200. So I entered at 295.71 back on the 26th of January. That was my signal. Red line down here is my emergency stop. Emergency stop is always 2 ATRs below my entry. And you can see right here, average true range 2 is 21.27. So I always have two types of stops when I enter a new position. I have an emergency stop, which is the most important, and I do this each weekend, but I want to show you this again. It's very important. You know, whenever you look for a entry signal, the first thing you always have to do is decide, obviously, how many shares am I going to buy? Well, there's some math involved the way that I trade here, and the first thing you have to decide is, what is my maximum allowed dollar loss on any one trade? A good rule of thumb is 1% of your total capital. So, you know, if you have $100,000 in your trading account, 1% of that is $1,000. And so that is the maximum that I am going to risk on any one trade. Now, if you have 50,000, 1% of that is going to be 500. If you have 25,000, 1% of that is going to be 250. If you have $1 million, it's going to be 10,000, right? So for this example, let's just go with trading account of $100,000. 1% of that is $1,000. And what I do is I take $1,000 and I divide it by the value of the 2 ATR. That's 2 standard deviations away from your entry price. So in this case, if I were buying it right here today, it'd be 21.17. So 1,000 divided by 21.17 is going to tell you to buy 47 shares. And then the reason that I use the 2 ATR as far as my position sizing is that I want to put my emergency stop well outside of noise. 1 ATR means that the price is expected to move 1 ATR on any given day, right? So 2 ATRs is 2 times that. So if I'm wrong, I'm really wrong, because now it's 2 standard deviations below. And the reason I use the 2 ATR is to adjust my position size for the volatility. We've had a lot of volatility, a lot of down, a lot of up now. The swings are big, and the bigger the swings in the market, using this approach, it will adjust your position size either up or down. If the volatility is high, then it's going to have you buy fewer shares to adjust for that volatility. If it's low, it's going to have you buy more shares. And that's what I love about using this. It's a real it adjusts for everything. So anyway, that is my emergency stop. Now my end of day stop is going to be a close below, in this case, the 200-day moving average. I always, whatever entry signal that I have, if that entry signal untriggers, then I get out. So my entry signal was the combination here of a close under the 200, close back over the 200, and an under 30 over 30. That's a confluence of signals. That's what I like. So again, take my maximum allowed dollar loss, divide it by the value of the 2 ATR on the time frame that you're trading. That tells me how many shares to buy. Then I take the value of the 2 ATR, 21.17, minus my entry price. That's my emergency stop. So if I get down to my emergency stop in this example, I've lost $1,000. Now, I usually wait till the end of the bar, whether it's daily, monthly, weekly, to get out of a trade. But if it ever comes down to my emergency stop, I get out immediately. And if it does come all the way down here, then I know I'm going to lose that $1,000, and I get out immediately. I do not wait for the close of the bar. So here we have our emergency stop. End of day stop is going to be what? Well, why did I get in? Because it went under 30 over 30 and under 200 over 200. So in this case, if it comes and closes below the 200-day moving average, that's my end of day stop. So you always have 2 stops: emergency stops, end of day stops. About 95% of the time, you're going to get out with a much smaller loss with your end of day stop, but you have to have those emergency stops in, because you just have to have an uncle point and say, okay, this is the maximum I'm going to lose on this trade, and I did, no questions asked, I get out. So emergency stop, end of day stop is the 200-day moving average. Well, you can clearly see we're still above the 200-day moving average, which is this black line here. So again, I entered under 30 over 30, under 200 over 200, entered here at 295.71. Now, orange line up here is 1.5 ATR trailing stop level. That means the price has moved the value of 1.5 ATRs above my entry. Whenever it gets there, then I go into trailing stop mode. And trailing stop mode includes me getting out if after I've hit trailing stop mode, I get a close below the previous day's low. Because if you were just trending up, you're generally not going to get closes below the previous day's low. So anyway, here we go. Entered at 295.71. Moved up nicely. You can see here on the 31st, I did get to my trailing stop level, which puts me into trailing stop mode, right? And then Thursday, we had the big down day in the market where I had a close below the previous day's low. So enter up to 1.5 ATR trailing stop level, now in trailing stop mode. And then Thursday, we had a close below the previous day's low. That's a red flag. I didn't sell the whole position. I sold half the position because it's a red flag, and locked in some profits there. So on a half of the position, roughly made about 1.96%, locked in the half position at 1.96%. Friday, of course, we had a nice big rally. So on the balance of my position on this trade, which is half, we take from entry to current price 3.35%. All right, so that is Microsoft. If it continues to move up, I will continue to scale out of my position whenever it moves 0.45 ATRs from the previous day's close. I sell 10% of the remaining position that I have. So what I would do, the current price is 305.94. I'd add the value of the 0.45 ATR, which is 476. So I'd add 305.94, add 4.76. That will be my first profit target on Monday. I'll put a limit order in for 10% of my shares. I will add this again to the first profit target. That will give me the second profit. I'll add that again to the second profit target. That will give me the third. So I always like to play offense and defense in trading. And what I mean by playing offense is I always sell a portion into strength, 10%, 20%, 30%, depending how far the bar goes up. That is, I love to sell into strength. If the market really wants something from me, I will give them a little bit, right? But I want to keep the majority of it in case it has a nice swing trend up. So anyway, up nicely on the trade, did lock in half profits here. If it continues to move up here, if we get to the 65 RSI level, then if I get a close below the 5 EMA, that will be my signal to exit the rest of the trade. Conversely, if it just keeps moving up, rejects the 70 RSI, that's a sign, a red flag, and then I would want to sell another half of the position that I had remaining, so essentially a quarter. And then if it rejects the 70, then if I get a close below the previous day's low after rejecting the 70 RSI, then I would get out of the rest of the position. So under 30, over 30, under 200, over 200 is my entry. Got to trailing stop level. Thursday took half off at a profit here because it closed below the previous day's low. End of day stop continues to be the 200-day moving average. If it stays above the 200-day moving average, and if it continues to move up, I'll continue to scale out on strength. I'll look for rejection of the 70 RSI and then a close below the previous day's low. All right, so that's Microsoft. The Qs, I did buy the Qs back here on the 28th. What was the signal? The signal was a under 30, over 30. That's one of my main signals. We also had a V1, which means on the day that I took the trade, the previous day had a low. We went below the low, closed above the close. That's called the V1. And then this line here is the negative third ATR channel. About 92% of prices hold at that level on their way down, at least hold or go up. And so this is a key place to look for. So the combined signals, it's very important for me to have the combination of signals was an under 30, over 30, a V1, and a rejection of the negative third ATR channel. So I bought here at 350.53. Same with the Microsoft trade. It moved up here to 1.5 ATR trailing stop level. Now I go into trailing stop mode. Thursday we had the big down day. It closed below the previous day's low. So I did have to lock in half profits. And the half profit was approximately 0.89%. Of course, I have my emergency stop down here, my end of day stop. This is a good example on end of day stops. Microsoft was the 200-day, but this is different. This was under 30, over 30. So my end of day stop is going to be a close under the 30 RSI normally. However, I do have another rule. If I move 1.5 ATRs from my entry after using an under 30, over 30, then if it ever gets back to my entry price, then I would get out. And on Friday, it looked like it was going to get pretty close. I never want to let a winning trade turn into a losing trade, especially with an under 30, over 30. So because we did move 1.5 ATRs from entry, now if it gets back to my entry price, I will just go ahead and get out, and that's just a rule. So we made the 0.89% locked in. The balance of the trade is up approximately 2.11%. Okay. Tesla has been a really, really nice trade here. What were the entry signals? Combination of entry signals, again, best signals, under 30, over 30, rejection of the 250, rejection of the 200, rejection of the negative third ATR channel, and a V1. Here's the V1. Previous day had a low, we went below it, closed above the close. So, this is about as good of a signal as you can get. Entered here at 834.46. You can see moved up the very next day, moved up to 1.5 ATR trailing stop level. So here I am looking for a close below the previous day's low, right? Because I'm in trailing stop mode. So we got there. Next day did not close below the low. Next day got very close to closing below the low, but did not. Next day did not close below the low. So I am in trailing stop mode, but I have had zero reasons to get out because my rules have told me not to get out. And this has been a wonderful trade, right? In at 834.46, currently we're 923.32. So far on this trade, up 9.47%. Where is my end of day stop? Well, why did I take the trade? Under 200, over 200. So therefore, if we were to close below the 200, I would get out of the trade. But so far this trade up 9.47%. Really, really great. Looking for a close below the previous day's low to get out. I'm not really looking for it. I don't want it to. I just want it to go straight up, obviously, right? But if it does keep moving up, then again, the 70 RSI is going to be the area that I will look for to take profits. And then if we get a close below the previous day's low after rejecting the 70 RSI, I would be out of the rest of the trade. So great trade so far on Tesla. IBM. Okay, why did I take IBM? Well, I took IBM with the close under and then close over the 200-day moving average. So I bought at 135.75. So, when I was looking at this trade, what was I thinking? I was thinking, okay, it's a nice close under 200, over 200. In addition to that, we had this big up bar back on the 25th. We held halfway of that support. That's another reason I like this trade. But when I saw this trade, first thing, what did I do? What's my maximum allowed loss? 1% of my capital divided by the value of the 2 ATR. That shows me how many shares to buy. I need to place my emergency stop. Emergency stop is where? It's the value of 2 ATRs below my entry. Then I have my end of day stop. Where is going to be my end of day stop? Well, why did I take the trade? Close under the 200, close over the 200. Therefore, if it closes back under the 200, that would be my end of day stop. Has it done that? No, and I'm very glad. Orange line up here, what's that? Well, that's the value of 1.5 ATRs above my entry. Have we gotten there yet? No, we have not, right? Where it's 137.15, trailing stop level's about 141. So I'm not in trailing stop mode. Have the emergency stop in, looking for end of day stop, close under the 200-day moving average. And this particular trade, so far, entry to current price up 1.04%. And Microsoft's been very strong, actually, compared to the rest of the market. And I was glad to see that. So IBM up nicely. All right, here we go. IBB. IBB is a new trade that I took on Friday. Yesterday on the 4th of February. Why did I take this? Well, this is a little different type of trade. This is called a higher low V1. What's a higher low V1? Well, first of all, here is this green line and this green line. This is the 1 1 ATR Keltner channel. This is the negative 1 ATR Keltner channel. Anywhere in this area between the two green lines, I consider the value zone. So a higher low is when you have a close below the negative 1 ATR channel. You then have to rally into the value zone. A lot of people get mixed up here and buy on these bounces here. You usually get a pullback because the people that bought here, you have a nice move up here. There's a lot of profit there. If it keeps going up, no one will sell. But if there's a lot of profit and starts going down, the people that sold here will sell. That's what usually causes this little down dip. I like that we came into the value zone, we pulled back, and then the entry signal for me was this higher low V1. And again, a V1 consists of two bars. Bar 1, bar 2. Bar 2 goes under bar 1 or washes out bar 1's low and then closes above the close. MACD was also green. This is a great I love higher low setups, and the reason I like them so much is because higher low setups have the ability to run pretty easily. These lower lows don't, because people buy them, they come into the value zone, they get weak, people sell them. That's what causes this to come down. But when you have a V1 or a V2, really what that is another group of buyers coming in, buying that dip, and now we don't have to worry about these people selling into us because they probably sold into this down move. So again, we were under the negative 1 ATR channel, we rallied into the value zone, we had a pullback, we had a new group of buyers come in here with the V1, V2. As always, I have to position size correctly, right? Which I did. I have to place my emergency stop, which I did, 2 ATRs below my entry point. The only thing we're missing out here now is an end of day stop. Well, an end of day stop on a higher low is very, very close, which is great. That's how it should be on all trades. And here we go. End of day stop is going to be a close below the washout bar. And when I say washout bar, I mean the V1 or the V2, the bar that washed out the previous day to make the V1 or V2. So right here, 130 is halfway of this washout bar. So this is a good example of giving me a lot of potential up room. If I'm right, if I'm wrong, Monday, if this closes below halfway of this washout bar, I will just go ahead and get out. So I entered this on Friday near the close. This is down very, very slightly. It's down 0.14%, but that's the new trade that I took on Friday. And again, I always want to place my 1.5 ATR trailing stop level. So let's hear what it is. Average true range 1.5 equals 5.98. So I'll take my entry price up 5.98, right about there. That's where I'll go into trailing stop mode. We're not there yet. So, all right. There we go. Don't know if this trade's going to work, but I did wait for my proper signal. I did position size correctly based upon the volatility. I put my emergency stop down here. I have my end of day stop here. I have my trailing stop level up here. So in trading, you never know what the market's going to do, obviously, but you have to know what you're going to do. You have to have if then statements. If it does this, I'm going to do that. If it does that, I'm going to do this. And this is this is a great example of setting up a trade of position sizing, emergency stop, end of day stop, trailing stop level, phasing out into strength, if it moves up, hopefully if it moves up. So those are all of the day on the trades that I took on the daily. I also have some on the weekly and on the monthly. I'm going to show you those, but I guess this is just a good time to explain that I like trading stocks on multiple time frames. I like trading monthly stocks, monthly charts, weekly charts, daily charts. Of course, I day trade all day long on 5-minute charts. It's one of my trading philosophies, and I think it's one of the reasons that I've been successful in trading is that I like to use different time frames. So at the end of each day, I look for my best entry. At the end of each week, I look for my best entry on the week. At the end of the month, I look for the best entry on the month. And we'll get into that right now. So those are the dailies. Microsoft, under 30, under 30, over 30, under 200, over 200 has moved up nicely, nice and profitable. Qs, same, just an under 30, over 30 rejection of the negative third ATR channel plus the V1. This one has moved up nicely and nicely profitable. Tesla, same, under 30, over 30 rejection of the 200, 250. This one's up really nice, 9.4%. IBM, under 200, over 200, up nicely. And then IBB, the one I just took on Friday, higher low V1, just barely, slightly down on the trade. All right, let's get over here to weekly charts, like I just mentioned. So I took, I went long IWM. Why did I take it? Well, it was a deep dip buy. Under 30, over 30, rejection of the 100-day moving average, and also a rejection of the negative third ATR channel. Remember, 92% of prices stop going down, go sideways, go up. I'm sorry, 92%, but not 100%. So you never quite know. So same thing here. I position size. The only difference here, I'm position sizing based upon the value of the weekly. The weekly has a much larger range than the daily. So this number is going to be bigger. Therefore, the amount of shares you're going to buy are going to be smaller to account for the larger range. So I bought this at the end on Friday at 193.20. I have my emergency stop way below here. My end of day stop is going to be a weekly close below the 30 RSI. This orange line up here, 1.5 ATRs above my entry, haven't got there. And this particular trade so far for the week is up approximately 2.76%, which is great. Facebook, well, yesterday was Friday, so it's the end of the week. So I'm going to take my entry based upon the close of the bar. Well, Facebook had a horrible week. Obviously, it was down 21.42%. Just brutal. Probably a good time to mention, why did it go down? Well, it went down because of earnings. So I never hold through earnings. You can see it was all the way up here at 323.24. Now we're 237.09. So if you held through those earnings, you got a rude awakening. I think it was the largest move dollar cap wise in the history. And so this is just a good example of why I do not hold through earnings. But earnings were over yesterday. Why did I buy this? Well, I bought this because of the rejection of the 200-week moving average. So I took my maximum allowed loss. I divide the value of the 2 ATR that tells me how many shares to buy. It also tells me how far below my entry is my emergency stop. In this hypothetical, I'm using $1,000 as my maximum allowed loss. This looks way down there, and it is, but if it gets down there, I will still only lose $1,000. Now, where is my end of week stop? End of week stop would simply be a close below the 200. You see how close we are to the 200-week moving average? That's how I want to set up my trades. If I just get a close below the 200-day moving average, I will get out. But I have to have my emergency stop in there just in case it all hits the fan, right? But like I said, 95% of the time, you're going to get out with an end of day stop or an end of bar stop instead of your emergency stop, but you have to have it in place. So very oversold, rejection of the 200. I don't know what it's going to do from here, but I set myself up a structure of a good trade by getting as close to my end of day stop as possible, position sizing, placing emergency stop. What do I need to do now? Well, I need to know where my trailing stop level will be. Here's 1.5 ATRs, 38.57. So I'll take my entry price, add 38.57 right about a little let's see. Here we go. All right, so it's going to be just slightly above there. So that will be my trailing stop level for the coming week. Now, I could be in this trade for a long time. If I'm wrong, I'll probably be out very quickly. If I'm right, I could be in for 3 weeks, 4 weeks, 5 weeks, a couple months. And that's good trading. When you're wrong, getting out quickly, and when you're right, having the ability to stay with the trade. Now, if it moves up to 1.5 ATR trailing stop level, then I'll go into trailing stop mode, meaning if I have a close below the previous day's low, I will get out. So I bought this here at 237.69. It's 237.09, so it's slightly down on the trade, but we'll see what happens next week. Merck. Merck was a great trade. I did get out. I exited, I believe, on Monday. Here we go. Why did I take the trade? Well, deep dip buy. I took this all the way back on the 10th of December, this nice little intraday rejection of the 200-week moving average. I bought at 71.90. I placed my emergency stop. Where would my end of bar stop been, or end of day stop been, end of week stop in this case? It would just simply been a close below the 200-week moving average. Well, it never did. It found support there, so I bought at 71.90, and it just moved up, moved up, moved up, moved up, moved up. Well, here's earnings. We had earnings on, when were earnings? They were on Thursday, so I don't hold through earnings. So that is the reason I got out. And look, got out right about exactly at the top. Even if I buy weekly, monthly bars, I'm still going to get out before earnings. So I entered 71.90. I exited the end of day right before earnings at 81.97. So locked in profits on this trade of 12.38%. Did I know it was going to hold the 200? No, I did not. But I had a trading plan. I knew what I was going to do to the downside if I was really wrong. I knew what I was going to do to the downside if it closed below the 200, right? Well, I got into trailing stop mode. I was going to get out with a close below the previous day's low. That never happened. So anyway, we're done with Merck, but I did exit that last week for a 12.38% gain, and really, really nice. Okay, let's head over to monthly trades. Well, had a fantastic trade. I exited Exxon on Monday. Why? Because of earnings. So I held through this for 1, 2, 3, 4, 5 months. I held this trade. Why did I buy it? Rejection of the 200-month moving average. I bought here at 54.75. My close would have been at my end of bar stop would have just simply been a close below the 200. Never got there, just moved up, went into trailing stop mode, had no closes below the previous day's low, just continued to move up. I got out before earnings. This was a monster trade, out at 75.46. Total profit on this trade 27.26%, which is just outstanding. But I did get out because of earnings. And then lastly, on the month, at the end of January, I did buy Southwest Airlines. Why did I buy Southwest Airlines? Well, I like this V2 here. Here is bar 1, 2, 3, 2 washes out 1, 3 closes above bar 1's close. I entered here at 44.74. Where is my stop? Well, I entered because of the V2 halfway of the washout bar. This is the washout bar. In this case is $42. So at the end of this month, if it closes below halfway of this washout bar, I will get out for a loss. I, of course, have my emergency stop all the way down here. And how much am I going to lose? Well, if it gets down there, right, based upon what I was telling you with position sizing, the hypothetical $1,000, if it gets all the way down there, then yes, I will lose $1,000. However, if it closes below halfway of this washout bar, I will still get out for loss, but much less. That's to the downside, always the most important part. To the upside, orange line here, 56.40 is my trailing stop level, 1.5 ATRs above. So this is slightly down on the trade. Not all trades are going to be positive. This one's down about 2%. But, the key with trading is setting your stops so that if you're wrong the smallest amount. But if you're right, you can stick with them and have them move up. And so, that's why generally my losses are fairly small and my gains are bigger. And that's really the key to profitable trading is looking for a confluence combination of indicators lining up on multiple time frames, having your line in the sand, having that emergency stop, but having your end of day stop very, very close. So that's it. Great year so far trading. I know the market's been pretty brutal. I think this is more of a trader's market at the moment, but the key is, and I was very grateful for this during this year so far, is that there were not a lot of signals when the market was going down, and so I stayed in cash. And now that we've had the signals and we have bounced, I have some nice positions and some really good trades. So, all right, well, that's a review of the trades that I have here. Let's talk a little bit about trader psychology. We are going to go through my watch list. We're going to take a look, and we're going to see if there are some potential trades coming up for next week. But before we do, I want to talk about some trader psychology. You have to learn how to trade. You have to look for good entry signals, emergency stops, profit targets, trailing stop levels. You have to have a plan. But if you don't follow the plan, what good is a great plan going to do you? I mean, the way I trade, I consider my plans great trades, right? They're good risk to reward ratios. I don't know what's going to happen, but if I don't follow them, what use is all the years of studying and putting these plans together if you don't follow them? And of course, emotions take over in trading and can get you off of your game. So keep your eye on the ball, follow your process. But that's why I like to talk about trader psychology and the importance. There's a lot of good Facebook, Twitter channels that I like to pull from. And one of my favorites is Money Trade Edge, Better Thinking, Better Trading. You can follow him over on Twitter. Just look for Money Trade Edge, Better Thinking, Better Trading. I love his posts. They're short, they're succinct, and they carry a lot of great wisdom. But let's see what he says here. You are your greatest trading enemy. It's true, everyone. The market is not your enemy. You are your own worst enemy in trading if you don't follow your plan. And I get it. I know. I've been trading for 25 years. When you start making a lot of money or losing a lot of money, it affects your emotions. It amplifies your emotions, and it makes you, not follow your process. But really, if you're having a hard time trading, most of the time, and I'm just saying this from personal experience, most of the time it's because of something I did, not because of the market. I had an idea, I had an opinion, and I thought I knew better than the market. And most of the time, those don't work out. And I've just learned over the last 25 years, just have your process, follow your process, good or bad, and you can kind of live with yourself. But if you make a wild decision that's not part of your process, and it's enough, and I get out, and then the market goes up, and you're like, oh, why am I not in this? Why did I get out? Or it starts going down, hits your stop, you don't get out. Why did you not get out? I don't know. Maybe in your mind you thought, well, this can't go down any further. Ha! Famous last words. And so regardless, if you break your rules and it goes against you, either to the upside or the downside, it doesn't feel good. And then that affects your emotions. And then that's like a vicious cycle. So my best advice, everyone, come up with a good trading plan. There's tons of them out there, right? The ones that I teach, great. Obviously, I think they're good enough that I use them, right? But there's many, many different ways to trade. But the key takeaway here is to please follow your plan. And hopefully your plan is based upon good trading principles. But you really are your worst enemy. You will always be your worst enemy in trading. That is why I like the idea of having someone watching over my trades. I have a couple trader friends that I share my profit and loss with every day, just because of the shame factor. I don't want to have to send them this huge down day, and it is positive. So, get a boyfriend, girlfriend, husband, wife, brother, sister, if you show them your trading results each day, it will have a positive effect on your trading because now you're held accountable. So again, please follow Money Trade Edge, Better Thinking, Better Trading over on Twitter. And one more time, you are your greatest trading enemy, right? Make yourself an ally, not an enemy, and follow your plan and follow your process. Okay, so lastly, before we start taking a look at next week's at the watch list and for potential next week trades, I always like to read a poem from my buddy Frank over on Twitter. You can follow him at Franco D, D-I, at Franco D. Friend of mine, he was a daily listener to my live podcast, and he's a writer, he's a professional journalist, he's such a great poet, great musician, and in the podcast, he would create a poem based kind of upon what was going on in that particular day in trading. And he has a real gift for this, so I'd like to share this real quick. Today's market poem. Every trader has a story to tell. Experience is the water we draw from the well. So much can happen between the buy and the sell. From these come the building blocks that help us excel. Isn't that great? Every trader has a story to tell. We all do, for sure. Experience is the water we draw from the well. Very important line here. The experience of trading, the more you trade, the more experience you get. I promise you, the better you're going to get. You'll see a situation before, you'll react to it better this time. So much can happen between the buy and the sell. That's certainly true. From these come the building blocks that help us excel. So essentially, experience and the tough times in trading will help you excel as a trader. So if you're having a tough time, stay with it, follow your plan. The more repetition you have with anything you do, whether it's playing the guitar, golfing, or trading, the more reps you do, the better you're going to get, because the more experience you're going to have. So thank you very much, Frank. Hope you follow Frank over at Franco D over on Twitter. All right, so let's head down through the watch list. You know, I was debating of not going through the watch list and just looking at the highlighted ones that look decent for the next week, but I kind of like going through the watch list because it shows you, hopefully what it does is it shows you why I'm patient and why I'm looking for particular setups. So we'll go through each one. I'll do a little commentary on each one, and there's, you know, on a lot of them there's not going to be any setups, but I'll give you an idea of what I look for in the next coming week, so you can just kind of get an idea of getting inside my head and looking for certain levels. But anyway, I know it's extra time, but I'm doing it because I think it's helpful, and if there is something for next week to take a look at, of course I'll mention that. So let's start with Apple. Here is Apple. Well, Apple did have a legitimate entry back here on the 1st of February with a 520 crossover. That is a legitimate entry. I did not take that. I like taking crossovers when I have sideways motion and then the crossover. This one came from way down, way up. Those tend to pull back, so nothing really here on Apple. For me to get interested in Apple next week, we are back in the value zone. That's a positive, but I'd like to come further down into the value zone. I'd like to have some sideways motion to show that there is some support with Apple. Then I look for a V1 or a V2. And you might be asking yourself, V1s, V2s, what's going on here? You know, on my YouTube channel, in my lessons playlist, I do have a video that talks about higher low V1s where I get more in depth. So I'm not going to spend a lot of time here. I don't really see anything on Apple other than next week, if we came back into the value zone, sideways motion, look for a V1. Alternatively, the 5 is above the 20. If it closed back under and then close back over again and there was more sideways motion in between, then I would be interested. So really don't see anything here on Apple to speak of for next week. Adobe, this is a higher low V1. We closed below the value zone. We came into the value zone. We had the pullback. We triggered the V1 here. Could be a decent trade. It would be a little too late right now to take this particular trade, so I don't see anything on Adobe. AGQ, Okay, well, nothing really on AGQ here at the moment. The first thing that grabs my attention, the RSI is 4167. So next week, if we have a close under 30, back over the 30 RSI, that would be an interesting entry for me. Deep dip buy entry. Conversely, if the 5 EMA closes over the 20 EMA, that would also be an interesting entry for me as well. So I'll go ahead and mark this one. Two potentials here. If it goes lower, under 30, over 30, that would be a legit entry next week. If we have a 520 crossover, that would be a legitimate entry next week. So I will mark that one. AMD. Well, AMD did have a nice close under, close over the 200. That was, a week ago. A little too stretched for me to buy this at this point. For me, advanced micro devices, if we had a 520 crossover, that would be interesting. Or if we came back, retested the 200, that would also give me a good risk to reward ratio and on this pullback. So I will mark AMD. Well, Amazon. Well, really surprised with earnings that came out, I believe, on Thursday. We had this huge gap here. I don't usually get involved with large gaps. Where would I be interested to get into Amazon? Couple, if we went over the 200-day or the 250, that would be interesting to me. However, we're up at the third ATR channel. I cannot buy up there, even if we got over. Really what I'd be looking for on Amazon, if I really wanted to get on Amazon, is we were under the value zone. We've come into the value zone. There's a lot of profit there because of this gap in the earnings. I would not be surprised to see us pull back. I would love to pull back, at least test this low or test the -1 ATR channel and then look for a higher low V1. That's a lot of speculation that that's going to happen. So I really don't see anything on Amazon that I like at the moment. ARC, very similar to the IBB that I bought. This is a legit, wait, let's see, close 73.14. Oh, 72.75. So no, we closed below the value zone, into the value zone, pulled back. We intraday, we did have a legitimate V2 there with the retest of the -1 ATR channel. I really don't see anything on ARC at the moment. Boeing. Okay, so Boeing, I like the sideways motion on Boeing here. My trigger on this particular trade would be a 520 crossover. But you can see, compared to that Apple trade, the Apple trade was down and straight up. I don't like those. I like the sideways motion because sideways motion leads to trends one way or the other. I don't know if it's going up. I don't know if it's going down, but I would buy Boeing next week personally because of this sideways motion if I have a 520 crossover. So I will certainly and most definitely mark Boeing. Alibaba. Well, we have earnings coming up there. No, actually, the Alibaba earnings were already passed, I believe, but, double check yourself. But I like the sideways motion here. The 5 is under the 20 EMA. If we cross back over, that would be a legitimate entry based upon the sideways motion. So I will mark Alibaba. Here is BITO. BITO is an ETF that tracks Bitcoin. Big move up here. Generally, this is where I'm concerned about people chasing. We're below the value zone, into the value zone. We had a big gap here. I would look for a pullback on Bitcoin at minimum to the halfway of this bar or a retest of the -1 ATR channel there. I think it's moved, on this big bar up here. I don't think I'm going to get involved with Bitcoin at the moment. Berkshire Hathaway. All right. Really don't see anything on Berkshire. Anheuser-Busch. Well, we are at 39.84. If we had an under 30, over 30. That would definitely be interesting for next week, so I will mark that. Beyond Meat, really don't see anything here. It is a higher low V1. We're closed below the value zone, into the value zone, pulled back, triggered the V1 in the retest here. But for me, it's already happened. I don't want to talk about signals that have already happened. I want to talk about signals that are in real time. So I'm just going to skip over Beyond Meat. Caterpillar, well, we're at 34.31. We're near the negative third ATR channel. That's all positive. So this is a good example of something next week that I will be looking for. 34.31. If we could go under 30, over 30, I would be interested in Caterpillar. CJ did have a higher low V2 in the value zone. That looks pretty decent. However, we do have earnings coming up. CCJ, probably the next legitimate entry on CCJ would be a close over the 200. So I will mark that one as well. Carnival Cruise Line, we closed below the negative 1 ATR channel. We rallied into the value zone. We pulled back. We retested the negative 1 ATR channel, which is important. We could have a beautiful higher low V2 on CCL if we get a close. But this only if it happens Monday. If it closed above day one's close. Here's day one. Here's day two. Two closes below day one. Day three would have to close above day one's close. Day one's close is 2034. So I'm going to put a line there. 2034. If we close above 2034 on Monday, that would be a nice, legitimate higher low V2. And the reason I say higher low is because if we do go up, this low is higher than the previous low. So that's where the higher low comes in, but it has not triggered a V2. It's just a potential, but I will definitely be watching that one for myself. DoorDash, don't see anything on DoorDash here. DIA, well, this is a legitimate entry on DIA with a higher low close above the 200-day moving average. If we pull back on Monday and close back under the 200, then if we close back over, that would be a decent place to buy. Or if we pull back even farther, key off of the 250, that would also give a good risk to reward ratio. Walt Disney tried to have a higher low close. Don't see anything on Disney at the moment. DocuSign pulled into the value zone, pulled back, did not create a V1 or a V2, so I don't see anything on DocuSign. Etsy, this was legitimate entry on Friday. Close under, close over the 30 RSI. Also has a double bottom with a bullish divergence, which is also good. I didn't buy this. I could have bought this certainly with this signal under 30, over 30, but I'll mark Etsy. We are back over 30 at the moment. If it gaps up, I wouldn't mess with it. But if we did have an under 30 back, if we did close back under 30 again in the coming week and then close back over, I would be interested. Facebook on the daily, well, I already bought this on the weekly, of course, but it's a different chart pattern on the weekly. And of course, I bought that with the rejection of the 200-day moving average. But on the daily, I don't think I would get involved here. We're at 24.64. Yes, I could buy, or you could buy if it closed back over the 30 RSI, but we're so far away from the 30 that would be a big move up. And I think most of the move will happen on the move to 30. I would not buy this right now. I feel like we had a big gap up here. So on the daily, I really don't see anything on Facebook. FCX, pretty good. I mean, we closed over the 200-day moving average. We have been holding the 200-day moving average. If we got to close under, close back over next week, then that would be an interesting entry there. Fiverr, close below the value zone, into the value zone, pull back. Really don't see anything here. Gold. Well, gold did have a legitimate entry signal on Friday with this close under the 200 and over the 200. I will definitely be watching gold next week. I'm not going to buy it now because it's already triggered. But if we get a close under the 200 and then back over the 200, that would be an interesting setup. Conversely, next week, if we have a 5 crossing over the 20, we get a 520 crossover, that would also be legit. So a close under the 200 back over is one. If we get a 520 crossover, that would be another. GNRC, don't see anything there. Google, of course, had big earnings, had that huge gap up. Where would I get interested in Google? Google would have to come all the way back into the value zone, sideways motion, V1, V2 to trigger you into the trade. Or conversely, a pullback to the 200-day moving average would be an excellent place. Buyers should be coming in at the 200-day moving average. It's a little extended from there, so who knows? It might come down, but I won't mark this because it's not likely. Goldman Sachs. Okay, so Goldman Sachs, a good back-tested approach on Goldman Sachs is a 520 crossover. The 5 right now is under the 20. However, if it crossed over the 20, that would be legit. I'd really like to see this move sideways before I have that V1, V2, but I will mark that one. Home Depot. Look, if we could come all the way back to the 200-day moving average, that would be an excellent place to look for a buy on Home Depot. So I will mark that for next week. IBB, well, I did take this trade on Friday based upon the higher low V1. So I'm already in that trade. INDA, which is India, the India ETF index. If we could, here we have a close under the 250. If we could close over the 250, that would be a decent place to buy. So I will mark that one for next week. Intel, don't really see anything here on Intel that looks likely that it will go next week. IWM, higher low V1 in the value zone. That is legit. I already have this trade on the weekly. I don't see anything likely for next week right now when I'm looking at it. Johnson & Johnson, pull back to the 200-day moving average would be a good place, good risk to reward ratio to get in, but that, I don't know if that's likely that's going to happen, so we'll move on from there. JO, coffee, don't really see anything likely there. Carmax, this was a legitimate entry on Friday with an under 30, over 30 undercut of this previous low here. I will mark Carmax, but really what I'm looking for on Carmax would be its 3330 RSI. If we could close under the 30 and then back over the 30, that's what I would be looking for. Coca-Cola, don't really see anything here on Coca-Cola. Lockheed Martin, nothing likely. Southwest Airlines, higher low V1 on the daily here, but I don't see anything likely for next week, and I already have that on the weekly. Lyft, don't see anything here. Earnings are coming up. Don't want to hold or get involved right before earnings. MasterCard, if we had a pullback to the 200-day moving average, that would be an excellent place. Let's mark that. McDonald's, don't see really anything on McDonald's. Merck, if Merck came back down to the 200-day moving average, I would be interested there, so I'll mark that. Microsoft, of course, I'm already in the trade. However, if you're not in the Microsoft trade and it comes back and retests that 200, that would be an excellent place to buy Microsoft again, so I'll mark that. Netflix, an under 30, over 30 on Netflix would be interesting, so I'll mark that. Nike, I don't really see anything on Nike. Nvidia, pull back to the 200-day moving average would be interesting, so I'll mark. Pfizer, don't see anything there. PKI, pull back to the 200. That doesn't look likely that's going to happen. PLTR, I think I'll pass. Philip Morris, Nothing likely. Earnings coming up. PayPal, my gosh, another example of holding through earnings. We could get a close under, close over the 30 RSI. We're still pretty low here with 25, so a move up to the 30 would be pretty substantial. I'm just going to pass on that one. The Qs, well, on the Qs, there are several options here. This was actually a legitimate entry on the Qs on Friday with the close under, close over the 250. So I will mark that one. If next week we get a close under the back under the 250 and then back over, that's legitimate. If we have a close over the 200, that's legitimate. Rio Tinto, no. Shopify has definitely been a wild one. Don't see anything here. SIVB, no. SLV, don't see anything there. I already did cover AGQ. Snap had a huge move up. Would not get involved here after a 58.18% move in a day. Virgin Galactic, don't see really anything here. The SPY, if we were to close back, if we were to retest the 200-day moving average, that would be legitimate on SPY. So I'll definitely, and that certainly could happen. Teladoc, don't see anything there. Teradyne, under 30, over 30. I think I'm going to stay away from that one. Bonds, don't see anything there. Tesla, I'm already in. Twitter, big day, up 7.13% with a higher low V2, but we have earnings coming. Not going to be interested in that. Unity Software, don't see anything there. United Airlines, we could have a nice higher low V2. Here's day one, here's day two. We closed below the value zone, into the value zone, pulled back. So for United Airlines, this would be interest to me. Let's see, the close of day one was 43.08. So I could put the line there, 43.08. So if we have a V2 on Monday, it would have to be on Monday. I would buy that. Depending, if there's a gap, then I probably would not get involved. But if it opened lower or even and then created the V2 back into the value zone, that would certainly be of interest. UNG, do not see anything there. UNH, don't see anything there. Oil's been on a big run here. My goodness, way too extended for me to get interested in. The dollar, no. VIX, no, really don't see anything on VIX. Verizon, no. Walgreens, if we went under, it's 34.40. If we went under 30, back over 30, that would be interesting. So I will mark that. Walmart, no. Energy Select, way too extended, looks a little toppy. XLF, pull back to the 200-day moving average would be interesting. That doesn't look likely. XLRE, this would have been a legitimate entry on Friday. See the intraday rejection of the 200. So I will mark XLRE. If we get a close back under and then a close over, that would be interesting. Utilities, I don't see anything there. Healthcare, pull back to the 200 would be interesting. Exxon, huge move up, way too extended. And Zoom, I don't see anything there. So let's real quickly go over the ones that I marked. Okay. Oops, what did I do? All right, AGQ. For next week, this is what I'll be looking for on these, the ones that I marked. Under 30, over 30 would be interesting. Don't know if it's going to happen. 520 crossover would be interesting. Don't know what's going to happen, if it's going to happen next week, but that's what I would be looking for. Under 30, over 30, or a 520 crossover. Advanced micro devices. If we had a pullback to the 200-day moving average and it rejected next week, That would be a great risk to reward ratio there. Boeing, I like the sideways motion. I love the sideways motion, actually, because sideways motion leads to trend. So if I had a 520 crossover, that would be my signal. Alibaba, check on these earnings. I believe they already had earnings, but please do your due diligence because you do not want to hold through. But if I had a 520 crossover and earnings were not, I think they've already happened, but double check. But if I had a 520 crossover, that would be an interesting place to look for Alibaba next week. Budweiser, we're at 39.84. So an under 30, over 30 would be a great risk to reward ratio next week on Budweiser. Caterpillar, potentially we're at 34.31 and under 30, over 30 would be a really good place to look for CAT. CCJ, if we could get above the 250 or the 200, but keep in mind earnings are there. Forgot about that. Here, yeah, it's a higher low V2, but I didn't notice the earnings, so I probably would stay away from Cameco. I'm going to take that one off the list. Carnival Cruise, yes, could have a potential higher low V1 on Monday. I will definitely be watching Caterpillar. If it were to close above 2034, that would be my entry signal. DIA, legitimate signal on Friday. However, if DIA does close back under the 200 and back over the 200, that would be one entry point. If it continues lower and retests the 250 and holds the 250, that's where I would be looking. Etsy, it's 30.99. If we could go under 30, over 30 next week, that would be my entry position on Etsy. FCX, if we were to close under 200, back over 200, that's what I would be looking for on FCX. Gold, a close under, close back over, or a 520 crossover. Goldman Sachs, a 520 crossover. That's what I'd be looking for. Home Depot, if we were to pull all the way back to the 200, but remember, I have to be patient and wait for it to pull back to the 200. That would be a great place. You can see it bounced there last time. INDA, if we were to close over the 250, that's what I'd be looking for next week. Carmax 33.30, if it were to close under and then back over the 30, that's what I'd be looking for next week. MasterCard, pull back to the 200 would be an excellent place if it gets there. Merck, a pullback and rejection of the 200 would be an excellent place. Microsoft, pull back to the 200 or a 520 crossover. Netflix, if we could go under 30, we're at 35.70. If we could go under 30 in the back over, that would be my plan for Netflix next week. NVIDIA, pull back to the 200. The Qs, rejected. It was a close under, close over the 250. Next week, if we have a bit of a pullback and then close back over the 250 or the 200, those are totally legitimate signals. SPY, if it were to retest the 200 again or close under, close back over, or conversely, if we have a move down, a rejection of the 250, you can see the 250 really held here last time. It respected that. UAL, potential for a V2 on Monday only if we were to close above 43.08 and doesn't close too far above it because you have to factor in risk to reward. WBA 34.40, if we could close under 30, back over 30, or intraday reject, that is what would be interesting to me. XLRE, if we were to retest the 200 or close under, close back over, or conversely, if we head down lower, buy at the 250, and XLV if we were to pull back to the 200. So, a lot of things to look at. With the market volatility, it could go either way. I wouldn't be surprised if we moved down. I wouldn't be surprised if we moved back up. But those are some good things that I will be looking at next week. I usually only take one trade a day. So just to be clear, if all these triggered on Monday, I wouldn't be buying all of them, right? I would look for the very best one of the day, or the best one on the weekly, or the best one on the monthly. So, and there's a lot to trading. You need a position size. You need to know where your emergency stops. You need to know where your end of day stops are. You need your intraday profit targets. You need your significant overhead resistance levels. You need a good trailing stop plan. So there are a lot of things to consider. It's not just as easy as like, oh, hey, I'm gonna buy that. So, if you are interested in learning all the nuances of the rules that I have, all the experience that I've had over the last 25 years, I do teach a private one-on-one course. I think the best way to learn anything is to learn one-on-one with your instructor or your coach or your mentor. And I have a great course. It's 15 hours total, just you and I on Skype, and I teach you all 5 of the different trading approaches that I have. I teach you step by step all the things we talk about here. It's a great course. I've taught people from all over the world. I've watched them succeed and grow. It's very important to me that my students succeed. So if you are interested in working one-on-one with me and having these one-on-one lessons, and you want to start that process, my email is in the link of this YouTube video. All you have to do is send me an email and say, Greg, I'm potentially interested in taking your course. I'll reply back and say, hey, that's great. Thanks for saying hello. Let's put together a Skype call. The Skype call's free. It's not a sales call. I just like to meet potential new students, find out about their trading challenges, their trading goals. And it's a great time for the potential student to ask me specific questions about the course. The course is great. It costs $1,750, but I promise you it is worth every penny, and it will make you a better trader. So if you're interested, just send me an email. Secondly, if you like online courses, I have a really great online course available at udemy.com. I've had so many good reviews, so much good feedback. In that course, I teach you the deep dip buy stock trading strategy. And almost all of the entries that I've had this week have come from that, and we've had a great week, right, using the deep dip buy. So it's a great course. There's 9.5 hours of video. There's 15 study guides. There's 26 videos total. It's very affordable. It's like $12 to $15 on Udemy. And so if you're interested in taking that course, and I would really suggest, really suggest, the one-on-one obviously is going to be better because I teach you all 5, but the deep dip buy is a great place to learn about position sizing, end of day stops, emergency stops, all the stuff that I need in a trading plan. It's great. And for the price, you can't beat it. So, if you have some time this weekend, just click on the link in the description, get the Udemy course. You're going to love it. And then lastly, if you liked the podcast, this weekend podcast, I would really appreciate it if you could hit the thumbs up button. It helps to, keep the channel around, keep us out there. And I try to provide as much information, the best information that I can. So if you appreciate it and it was helpful, all you have to do is hit the thumbs up button. And I think that's it. So I hope you have a good rest of your week. Please be careful next week, regardless of how you trade. If you have any questions, feel free to email me. If you have any suggestions about how I can improve this podcast, this weekend podcast each week, just email me. And so I hope you enjoyed it. Be good, be safe, go out, get some exercise. I always mention in my live stream, try to go out and do something nice for someone today. It would make the world a better place. If you could do the same thing for an animal, I'm a big animal lover. If you could go out, help an animal, that would be great. But if you just did one nice thing every day to one human, one animal, the world just by default would be a better place to be. So I appreciate your time. Hope you have a nice weekend. I hope you have a good upcoming next week, but please be careful. Always concentrate on your risk. If you concentrate on managing risk, that's when your profits are going to come. Ironically, if you only focus on profits, that is where your loss is going to come. So again, thanks for coming today. And on the way out here, I have to run the U.S. legal disclaimer. But thanks again for listening. And we'll see y'all later. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.